Hey, I know this is a little different from my normal videos, but please let me explain. As you know, my channel covers shady things in the gem and mineral trade in hopes to warn people about pitfalls and maybe clean up some things. If I see something shady or scummy in general, I call it out so that other people don't fall victim. Also, this video is a statement of my opinion based on my observations, and I am asking questions as well. Trying to gain a perspective while warning others of a potential financial pitfall is within my right of free speech. I have seen something that I truly believe to be awful and wanted to express why I feel it is so wrong. If I'm incorrect about this or you have something to add, feel free to comment. So, as you saw from the title, this video is about Bluebird Bio, and I'm wondering if they just betrayed all of their long-term investors. So just a little precursor before we get into it. Bluebird Bio is a biotech company, and they specialize in genetic treatments for conditions that don't really have any other cure. One of those is beta thalassemia, and their treatment for that is Zynteglo, cerebral adrenoleukodystrophy, and their treatment for that is called Skysona, and they also treat sickle cell disease, and their treatment for that is called Lyfgenia. These three drugs have been approved by the FDA, and it's been a long time in development, and the company's also had some really hard financial times. It was one of those companies that's struggling, and it seems like they're just about to turn the bend to where they're going to be breaking even and starting to make a profit. They're actually treating patients. This is really promising research, and it's something that I believed in because I thought, this is something that I could invest in and benefit the people that need the treatments and maybe make a little bit of money at the same time. So it would be symbiotic, where I'm getting some benefit as a shareholder and also the people are getting the treatment that they need. And these are all very serious diseases. So here's the concerning press release. Bluebird Bio announces definitive agreement to be acquired by Carlyle and SK Capital. Bluebird stockholders to receive $3 per share in cash and a contingent value right of $6.84 per share in cash payable upon achievement of a net sales milestone contingent upon offer conditions. And then it goes on to say that Bluebird's board of directors determined this transaction is in the best interest of stockholders following a comprehensive review of strategic alternatives. So that's the first point that I want to make, is that the board of directors determined this without having a vote. I didn't know that anything like this was going on as a shareholder. There was a vote back in November and December. They had you can see this here, they announced a 1-for-20 reverse stock split, and we'll get into that in a little bit. And that was something that was voted on, and they voted on, people getting into the board, and, it seemed like fairly basic things that you would see with a stock. So there were votes, but nothing like this agreement was ever talked about with shareholders or voted on. So Carlyle and SK Capital, in collaboration with a team of highly experienced biotech executives led by David Meek to support Bluebird's growth, and goes a little more into the people. And then this paragraph here, under the terms of the arrangement, Bluebird stockholders will receive $3 per share in cash and a contingent value per share, entitling the holder of the payment to a $6.84 cash per contingent value if Bluebird's current product portfolio achieves $600 million in net sales in any trailing 12-month period prior to or ending on December 31st, 2027. And really quick, we're going to look at that $3 value because that's post-split. So if you divide that by 20, that's 15 cents per share. And when they announced this, the stock dropped 42% in one day. Total possible payout, if you added that 15 cents and then the other 34.2 cents pre-split, that would be 49 cents a share. When I got this back in mid-2024, there were shares that I paid around a dollar per share, give or take a little bit. So this is a much lower price than even some of the low prices from last year. And if you look at the 2018 value, the stock was worth as much as $130 pre-split. And that possible payout of the $6.84 is dependent on the net profits, not gross profits. So this is something that companies, it's a super old trick in the book. If you don't know about net and gross profits, you probably shouldn't be investing. But basically, gross is all of the money that's coming in, and net is that money that's coming in minus expenses. So that $6.84 per share is contingent on, and we'll go back to this and look at the transaction details. That's contingent on achieving $600 million in net sales in any 12-month period up to December 31st, 2027. So they would have to have a huge amount of money come in after they go private for that extra portion of money to go through, and that's highly unlikely with the way most corporations operate. It's not impossible, it could happen. I'm just saying personally I don't think it's going to. So that 15 cents per share, which is, pennies on the dollar, is what the shareholders are, being proposed to be bought out for. And for this to happen, there has to be a tender of a majority of the outstanding shares of Bluebird. There's some regulatory approvals and other closing conditions. Bluebird has also entered into amendments to its loan agreement with Hercules Capital Incorporated to facilitate adequate liquidity to position it to maintain operations through the closing. And they had secured some funding through Hercules Capital previously, and I don't really have a problem with that. That was a funding source that was outside of the stock, and it wasn't at the expense of the shareholders. So the problem that I have is these two companies, Carlyle and SK Capital. If you want to read into them, I'm not going to go into it super in depth. They're huge investment firms, private, and that's where the problem is this is going from, Blue is going from a publicly traded company to a private company, and this was not something that I saw on the table as a possibility when I bought the stock. Generally, the way that the stock market works is you have a company that gets on the market and they sell shares, which are an interest in their company, and people pay money for those shares with the promise that if the company makes money in the future, the shareholders would get some sort of a cut. They would get a dividend, or their share price would increase. And what happened here, it really looks to me like what you see with like a rug pull in cryptocurrency, where the company has taken all of the shareholders' value and all of that investment time and money that we put into the company, and they have put that into their infrastructure. And now that that infrastructure is built, instead of the other side of the coin where we're supposed to finally see some profits in the coming years, I was planning on holding this till at least 2030. Like I knew it was going to be a while before they made any money. But I didn't think that it was possible for a private entity to go in and just buy the company and pretty much force the shareholders into a sale, drop the price of the stock by 42% in a single day. Here's the chart of that if you want to see it. This was from Friday, the 21st, the same day the press release came out. Yes, it looks like about $7.20, 23 cents, all the way down to $4.08. And that's an awful lot for one stock to move in one day. And if you look at what the stock was worth at one point, there's that $2,600 post-split. So if a majority of stockholders tender their shares, as far as I understand it, that $3 and up to the other $6.84, which would be pre-split roughly 49 cents, that would be all that the shareholders would get, and then they would have no more say or shares or anything in those private firms. So basically, the share price has been going down for a long time, and that money, that shareholder money, was put into the corporation. They developed lots of treatment centers, they developed drugs. And now that that's developed, this private company has swooped in and basically rug pulled all of the shareholders for pennies on the dollar. If this is something that is normal for the market to have happen. Long-term investment in the stock market, I mean, this could happen to any publicly traded company if they have some bad times and they can just decide that we're going to get rid of all of our shareholders and sell out to a private company now. If they can do that, that is a major breach of trust. And I call that a breach of trust because if they can just sell me out for pennies on the dollar and I don't get to see that future, that seems really unfair. Just for clarification, this isn't somebody on the internet crying because the number went down and they lost money. Like, if that was the case, that happens in the market all the time and nobody cares. Like, I understand that risk when I get into something, but what happened here is the company is still going to make it. It's just the shareholders that are getting slaughtered. And the private company is going to make all of that money, possibly hundreds of millions or billions of dollars, because there's a lot of people with these genetic conditions that need to be treated. That's all going to go into massive private corporations instead of going to the people that really believed in and supported this company and the treatments they were developing. I feel like I can't trust any publicly traded company anymore if this is something that a board of directors can do to their shareholders without holding a vote. They're kind of, if they have at least 50% of the shareholders agree, then that would be like a vote. But a lot of people are panicking and wanting to get out of this because they crashed the price by 42% on Friday. Like, that's going to mess with anybody's head. And the way that they've posed this, you look right in the title and it says announces definitive agreement. So they're 100% in on this, and there is no alternative. That they wouldn't use that. I don't think they would use that term definitive if it wasn't definite. So it seems very unfair to believe in the future of a company enough to where you invest in their stock, and then when that future finally gets close, for them to just say, oh, well, you did put that money in and we'll give you a few pennies on the dollar for that. This is really the best thing for you. And we've decided that by ourselves, that this is the best thing for you. Something like this company was recommended in a lot of articles over the years. And, of course, those articles say that there's some risk and everybody understands that. But that understanding is either the company makes it or it doesn't. It isn't the idea that, the shareholders can be put into some form of a relatively forced buyout. And then if it does make it, that money is going to go to big business. That's not for you, Oh, God, no. You can't actually make money in the market as an individual investor that's, you're somebody that works for a living, or you're trying to plan for your future. Maybe you want a house, maybe you want to be able to retire. Nah, that's not for you. That money should go to the big business people that show up at the end, the pack of vultures. The major overarching point that I'm making here is, if this can happen to one company that's having trouble, any company that's publicly traded that's having some trouble, their board of directors could unanimously decide to do something like this, and the shareholders really don't have much say. And if that's the case, then it's really hard to have faith in the stock market at all, because, if that truly good deal comes to fruition and they're going to start making money, and a private entity can go and swoop that up, these people are studying this. They're absolutely going to go for that deal 10 times out of 10. They're going to look for somebody that's hurting, that's willing to sell out their partners, and they're going to swoop in and take it, and then they're going to get all of those profits that we waited for. And apparently that was, it speaks to me that it was a false promise. And if I'm wrong about that, by all means, let me know, but it absolutely seems like that is what's going on here. So yeah, that's about it. I'll be back to my regular content this week. I've got some more videos coming out, and I'll see you in the future. Thanks for watching.